Hey fellow trade geniuses, this is Philip, and in this video I wanted to go over binary option trade sizing. Trade sizing, especially with binary options because they're highly leveraged, is very important to make sure that you're giving yourself enough cushion for the strategy that you're implementing so that you can handle drawdowns and not have to go back and refund the account. Also, capital preservation is a key component to proper trade sizing. So I just wanted to go over some basic guidelines that I've used myself and recommend that you guys use as well. So the general rule of thumb is one contract per $1,000 of capital. That's gonna keep you from refunding anytime soon, especially if you're using our high probability strategies. Now, some people will say that's, you don't need to do that, but if you're just starting out, you're gonna make mistakes. If you're not familiar with the Nadex platform, I guarantee you're probably going to put it in order backwards. Um, you know, this will handle some drawdown if there's a little stretch of losing. All the real world stuff that we contend with. So one contract per 1,000 is safe, and you're not going to have to stress about refunding anytime soon. So that's a conservative general rule of thumb, especially if you're just starting out with binary options to get your feet wet. Okay, now a little more aggressive rule would be one contract per 500. Now, if you're getting some experience with the platform and what we do, especially, then sure, you can go to one contract per 500. It is more aggressive, but as you build up capital and your experience, you definitely could do that sizing with our system. Now, an ultra aggressive strategy would be one contract per 250. You could do that starting out. You hear oftentimes, oh, get started with binary trading for just $200. And it's true. I mean, you could do that. I've taken accounts from 200 and change and I've grown them to many thousands. And I did that when I was first starting out with binary options. It was like the last time I had to refund, I think my account was at like $230 when I was just first starting out with the binary option platform, and then took off from there. But if you're not, like I was saying, if you're not familiar with the platform, this doesn't give you a whole lot of room for error. Our strategy will work with that. It's possible, but you're not. If we say we had two losers in a row, you're going to put a big dent into that capital amount. Those are kind of like my three levels. You've got conservative, aggressive, and ultra aggressive. Okay, so what I wanted to do was show you guys how that applies to what we do. So what I wanted to do was show you last month's performance, which is fairly typical. Uh, we didn't have as many trades as I would have liked because of the holidays, but here it is. So our hourly FX signals, which is that's our 96% average high probability signals algorithm. So last month we went 17 and 2, and we ended up at $148.50 per contract. Yes, 17 and 2 is not 96%, but that is the lifetime rate of that signal. So as with anything, you're having some months better, some months might be a little lower, but on the average it's 96%. Okay, so that was the hourly FX signals. Now on the swing signals, we went 3 and 2, and we went $52.50 per contract. So end of the month, we were up $201 per contract. So what does that mean? Well, you could have funded a Nadex account with the minimum of $200. You actually could have traded one contract all through the month of December, taking our signals. That actually would have been even more aggressive than the ultra aggressive rule I have of one contract per $250 of capital. So that would have been one contract per $200 of capital, right? And you would have doubled your account size in the month, going from 200 to 400. So you can see that our system, because of the way it performs, it's one of those few ones you can get away with a little bit of capital to get going. And some guys will do that. They'll go super aggressive and they'll kind of back off as they get more capital. But just know that, that doesn't leave a lot of room for error, and you may have to refund. So it's really what it boils down to. Now, as your account grows in size, when you start out with $500 and say you want to do trade two, you're going to fund your account with $500 and you're going to, do 2 contracts. Well, you're not going to do 2 contracts per 500 of capital on a large account because it's just not necessary. You start getting into like a $10,000 account, then 10 lots is a healthy trade size, and you're not cutting into your capital. But what you need to do is you need to establish what your maximum risk is at any given time for your account, right? When they're small like that, you can have crazy growth. You can grow your account by 800% real fast. But as your account grows in size, there's no need to be risking all of that account every single time. You've invested a lot into it to get, either you invested a lot of money to just fund the account at that size right off the bat, or you've spent a few months building it up like to that amount. So at that point, you want to start looking at what's a conservative amount of the account capital that you're going to risk every time, and stick to that. If it's 10% of your account size, stick to that. And if your account you lose, then shrink it down. And that way, you stay in the game. And this game is about survival. If you're still around trading 3 years from now, then that means you didn't blow up and you're making money. If you're still trading in the same account and you have not refunded, and you're still trading a couple, 2-3 years from now, you've been through all of the scenarios, you're making money. So talk to anybody who's been in this game long enough that has traded successfully. They'll say that survival is the name of the game when it comes to trading, and that boils down to proper trade size management. So some thoughts there, and it also ties in with discipline, right? You can't get crazy and succumb to crazy trade sizing. So you gotta have a plan and stick to that plan. And really it comes down to how much of your account are you willing to risk every time you put on a trade. Okay, so I hope that helps. The next video we will probably get into is logging and what you should be logging. And until then, I hope you enjoyed the video. If you haven't subscribed to the channel, please do. Leave us some comments or likes. And happy trading, guys. Until next time, take care.